So, Jonathan, we know like Ping An is one of China's largest insurance firms. But why are they setting up this 1 billion like tech fund investing in fintech and healthcare? What are you guys trying to do there?
Well, I think it's probably helpful to just explain a little bit about what Ping An is. And Ping An is indeed a very large financial services company in China. And on the financial services side, we have about 140 million clients. But we're also a company that spans the digital divide. So we have a very wide range of digital businesses in addition to having a very significant digital component to our traditional businesses. In aggregate, we have about 375 million digital users across all of our platforms. And in addition to being very innovative in rethinking how we deliver our traditional service offerings in insurance, whether it be life insurance or auto insurance, where 90%, for example, of our car insurance policies are originated via a mobile phone, which I think is unique in the world. 90% of our underwriting across all of our insurance platforms does not touch human hands, so we're using automated tools to support that. There's a very high level of automation in all of our workflows. But in addition to that, the company has been able to create entirely new businesses. Probably the most prominent example is Lufax, which is today certainly one of the most important wealth management platforms in China, and started life as the most important P2P lending platform in China. And that platform is worth about $20 billion now and has about $65 billion of client assets under management. So I think in the context of what Ping An is, this ability to rethink its existing businesses, but also to create new platforms on a repeated basis, obviously the role of innovation is fundamental. It's nothing new to Ping An, and I think the chairman and chief executive of Ping An, Peter Ma, is one of the truly great visionaries within the financial industry, and I think at the global level in business, and is a real innovator. But my role is to be a catalyst to further innovation and to make sure the company is open to and has access to the latest and most interesting innovations from around the world, whether it be in fintech or in health. In health, we can talk about that. We have a very large range of businesses. And we feel that the combination of the innovation role plus the $1 billion global Voyager fund that we've just set up is a very powerful combination and a very powerful way of accessing innovation on a global basis.
You just mentioned something very impressive about like people buying their insurance on mobile phones. So what are you looking at for your fund, your $1 billion fund? Are you looking for something for your strategic purpose, or is a pure investment? What kind of areas? Do you have specific areas that you focus on?
Well, we certainly do. So firstly, it's $1 billion in scope. Secondly, the two areas of focus are fintech and health tech. Ping An has a very wide spectrum of financial businesses, so that means that the range of potential fintech opportunities we're interested in is quite broad. And similarly in health. I'd say in fintech it's broader just because of the spectrum of businesses that we operate in, and that means that pretty much any financial innovation is of some interest to us. What we need to do, of course, is prioritize, just given the vast spectrum of opportunities that's out there. And so we have a pretty structured framework for what's going to be most useful to us. Of course, it includes insurance technologies, particularly on the distribution side, but it also includes advances in automated underwriting and risk assessment. We're a very big investor, so we're very interested in technologies that can support and can automate our investment processes, both for ourselves and for our clients. We're a large bank, and we have a platform that supports a large number of smaller banks in China, so we're very interested in the full stack of banking technology. And we're a significant player in personal lending, so areas like P2P lending are quite interesting to us as well. So it's quite a range of opportunities. On the health side, What we're not interested in particularly is asset-heavy businesses. We don't particularly want to own hospitals if we don't have to. We don't particularly want to be in the medical equipment business or the pharmaceutical business. So what we're interested in is digital overlays across the health system that can be very powerful.
So you, like talking about fintech, I mean, we know China is like one of the pioneers in fintech. Companies like Alibaba, Tencent, their payment system is everywhere. Like adoption is super high compared with other countries. And they also do other stuff like P2P you mentioned, and like money market funds, all those stuff. So what do you see in the market, like in fintech, compared with them? Are you like going against them, or are they your biggest rivals?
Okay, well, there's no question that there's a new competitive landscape in China, and contemporary technologies, whether it's delivered by the BAT group or whether it's delivered through the major players in the P2P lending sector or other entrepreneurial companies, there's no question that the landscape has shifted in China more rapidly and to a larger extent than we've seen pretty much anywhere else in the world. Obvious examples, as you mentioned, are in payments, in money market funds, and I think we can expect this trend to continue very significantly. So our competitors are indeed the new generation of digital companies. We actually have a view that we're not really in the game of competing necessarily in financial products. Our vision for the company is really to be an information company. Increasingly, we see the delivery of financial services being commoditized by technology. We see the value coming from information use cases, whether it be the ability to assess risk, to anticipate clients' needs, to customize offerings, to structure portfolios for clients. So very much our mission is to acquire, access and utilize data assets in a powerful way and build client value from them. That's true in financial services. It's equally true in health. So a lot of what we're looking at in the investment sphere and in terms of possible partnerships for Ping An is in that space.
So you mentioned about like you being in an information business, right? So big data is like a buzzword for like in the industry in the past few years. So talking about like against Alibaba and Tencent, what's your edge there? What's your edge there over like they have tons of data too. People use their apps every single day. So what's your edge there when you compete with them in like fintech, in online financial services?
Look, I think I don't want to particularly comment on Ali or Tencent. They're obviously both excellent companies and doing very well and really deep capabilities. I think what Ping An has that's interesting is, firstly, deep client relationships. So the 140 million financial clients that we have who have insurance policies with us, who are our banking clients, who have our trust products, who borrow from us, who are our securities clients. And increasingly we focus on building deep relationships across all these platforms. That depth of client relationship, I think, is unique to Ping An against the set of digital competitors. And I think our ability to take that and to be able to work across digital platforms, whether it be offering capabilities through WeChat even, and actually in effect leveraging the platforms of new generation technology firms, as well as developing our own capabilities. I think the ability to bring those two things together is very powerful.
So, I mean, I think it's interesting that a big insurer is like investing into fintech, embracing the technology. So, any things in the China, like in the market overall, like financial industry, that you see that offer like unique opportunities, like compared with other markets?
Well, one area that we're really interested in and putting a lot of emphasis on is machine learning and artificial intelligence. Excuse me. And I think we're seeing China probably move ahead more comprehensively than any other market in the world in that space. And I think we continue to see very interesting entrepreneurial companies in China, but also major institutions, particularly technology companies, and people like ourselves investing very heavily in these capabilities. So I think that's a space to watch in China.
Okay. And talking about another area that you are looking at, like healthcare. Why healthcare? what do you see? What's the problems in China about healthcare?
Okay, well, healthcare is fascinating for us. We're a very big health insurer, and we see the health sector as potentially being as big or even bigger than the financial services sector over time. And I think that's really interesting. Ping An has very strong capabilities today. We have a platform called gooddoctor.com, which is the largest telemedicine platform in China with 140 million users. It was valued at about $3 billion at its last capital round. So that's, I think a very powerful asset for Ping An. We have a platform to help the municipal governments in 250 cities administer the state health insurance system for medical payments. That touches 600 million people. We have a clinic platform that provides enterprise software and services for about 30% of the private clinics in China. And we have a health cloud that is basically building a profile of everybody we touch, obviously on a permission basis in terms of their data and their records. So what we're trying to build towards is an ecosystem of reinforcing capabilities and properties that allow us to add value to the Chinese health system. So China has the whole spectrum. It's got excellent capabilities at one end of the spectrum, but obviously given the size of China, given the geographic diversity, there's a long way to go in much of the health system. It is still largely state government dominated, and the standards vary very significantly. So there's huge opportunity to introduce digital tools, whether they be telemedicine, simple triages that says, you can take out 50% of the people that need to see a doctor simply by giving them information that's customized to their particular condition. You can take out another 30% or 25% by actually dealing with patients remotely rather than requiring them to come and see a physical doctor. In the clinic systems, you can take out lots of specialized areas of expertise through remote diagnostic services or remote, let's say, imaging services for interpreting X-rays, CT scans, endoscopy, stuff like that. So, we see a whole range of capabilities that we can build, all of which are data-driven, all of which leverage digital assets, which can add value, can take the burden off the government, and can help the Chinese health system allocate its resources efficiently and ultimately profitably.
So you just mentioned like taking the burden off the government. So in the China system now, I mean, what do you see the needs there? What do you see the problems there that you could solve by introducing more tech? I mean, you mentioned lots of that, but anything specific to China that the system is the problems?
Well, I think that one of the general problems that all health systems that have a large government component face is the effect of incentives. And if you have an incentive system that basically incents hospitals to create chargeable activity, there's always going to be a risk of over-servicing and over-prescription. And one thing we offer as part of our state health insurance administration platform is tools that allow us to identify that and allow the municipalities and the hospitals to control that. So that would be a very specific example.
Okay, I see. So, but you also mentioned you don't want to invest in all this hardware business, right? It's more, even in healthcare, you're looking more like software system?
In general, digital assets. So maybe I can just say a little bit about what the fund is going to do as well, which would just sort of focus on, perhaps what people here are interested in. It's $1 billion, fintech, health tech. We have sort of 4 buckets that we think about. The first is early stage. In health and in fintech, there are 15,000 startups in the world. There are many estimates of how many, but let's just take that number. We can't possibly cover that universe in an efficient way. So we intend to do that via partner funds, some of which are broad, some of which are more focused. It's probably half a dozen in the aggregate across the 2 sectors. And our objective is to gain access, gain relationships, gain potential partners at an early stage, and also access to follow-on rounds of financing through those funds. The second bucket is what we think of as our sweet spot. Our main focus is going to be investments in the range of $10 to $30 million. For us, that implies an enterprise value of probably $100 to $550 million, depending on the stake that we choose. In general, we will be taking minority stakes. We have no particular desire to take over control of companies that are run by good entrepreneurs. We think the best thing for entrepreneurs to be is entrepreneurs. But at this stage, the company is going to be 3 to 7 years old. They're going to have a product. They will have gone through their early stage partnership issues. They will, I think, be in a position where we can have a conversation about some form of strategic cooperation. By focusing on the 10 to 30, we will inevitably bump into opportunities at the next level, which we're very interested as well. So $30 to $100 million investment opportunities. And we're interested in investing in a small number of those. And then lastly, there will be special situations where there will be motivated sellers, there'll be assets that are available that meet our criteria, that have strategic value for Ping An, and where we can hopefully access them at a reasonable price over our 3 to 4 year deployment period. So that's sort of the frame: 10%, 8 to 10% in the early stage through funds, and then 30, 30, 30 in terms of the other 3 buckets that I mentioned. And the overriding objective is strategic. It is to basically bring value to Ping An. But there are 2 other things that we're interested in as well. One is that we're uniquely placed to actually co-develop with partners. We have 20,000 developers within our stable, in our technology organization, which is sort of a unique asset. We really can bring resources to bear with partners, and it's not a big deal for us to put 100 developers on a project for 6 months or a year and build out an ecosystem or extend a platform or build apps for somebody. So we're very happy to talk about co-development. And lastly, we are selectively interested in international opportunities. Through the fund, we won't be doing acquisitions. That would be done separately if we were to do them, but we are very interested in partnership opportunities to help build particularly finance and perhaps health adjacencies for companies that have digital assets and digital clients.
Okay, I think there are many startup founders here. So what should they do to catch your eyes?
Well, as I said, we're unlikely to be interested in investing in early stage companies, but we are interested in investing in funds that invest in early stage companies. So if you're in that stage, we have no problem being aware of you, but it's just unlikely we're going to invest. I think the best thing for you to do is to find quality funds that are going to invest in you, and we'll access you via that route. But I think for larger companies that are sort of 3 years in, that meet the criteria that I mentioned in the 2 sectors, we're very happy to talk.
Okay, thank you.
Thank you very much.